Incoming transmission standby. Welcome to the Nod News Network. Swiss financial center suffers from Russian sanctions, media. According to Swissinfo, the restrictions have led to a mass withdrawal of capital. Swiss banks are concerned that outflows from wealthy Russians due to sanctions will not spread to their other clients, Swissinfo reported last week. According to the report, G7 countries, especially the US, are questioning whether Switzerland is doing everything in its power to find Russian assets hidden in bank vaults. Swiss banks complain that in addition to existing regulations on tax evasion and money laundering, they must now comply with US, European and British sanctions. The situation is especially complicated and difficult for banks with many branches abroad. Philipp Rickenbacher, CEO of Julius Baer Bank and chairman of the Swiss Asset Management Association, said, conflicts between the US, EU and UK sanctions regimes continuously lead to difficulties implementation and unnecessary risk of non-compliance. Said before. The report said Swiss sanctions on wealthy Russians and their businesses had forced them to move money elsewhere, including to the United Arab Emirates. Swiss private banks are concerned that this trend will spread to customers in other countries. Sources previously told Reuters that Russian citizens transferred money from Switzerland and Britain to Dubai after the two countries sanctioned Russia and threatened to freeze the assets of prominent Russian businessmen and politicians. Switzerland, which is not an EU member and considers itself neutral in foreign policy, for the first time applied all sanctions imposed by the EU on Russian citizens and companies in 2022, including asset freeze. Extraordinary situation, affirming that Switzerland's neutrality remains intact, but of course, we stand on the side of Western values. The report said that after Switzerland decided to join EU sanctions, the country had no choice but to apply US sanctions, which have extraterritorial influence due to the power of the dollar and the US financial system. Swiss bankers are said to have argued that instead of applying these measures carelessly, in future the government should actively seek to influence global sanctions in an appropriate way with its domestic agenda. The report also points out that there is no accurate information about how much money rich Russians hold in the country. According to estimates by the Swiss Banking Association, the total amount could reach about 150 billion Swiss francs, $170 billion, while the amount of overseas assets managed by Swiss banks could reach up to $2.4 trillion. Martin Hilty, director of Transparency International Switzerland, told Swissinfo, the paucity of information about Russian assets in Switzerland shows that the authorities are not active enough in finding hidden assets of people punished. They should apply sanctions proactively by participating in international working groups, he argued. Bern has so far rejected this type of international cooperation, arguing that Swiss sanctions have worked perfectly without participating in the Repo Working Group on elites, proxies, and Russian oligarchy, established between the EU, G7 and Australia in March 2022. This has been the Nod News Network, transmission complete.